Okay. Well, my name is Eric Temples. I'm the Assistant Director at the Thompson Center. And I want to take a chance to thank the panelists that we all had, as well as the moderators. I think the earlier discussions were outstanding. And we have the opportunity today to have Michael Morris with us. And he's the founder of the National Disability Institute, as well as the Able Resource Center. And so he's going to be giving us a really a national perspective on some of the issues that we've been talking about today. He's advised folks from local, state, and even federal level government officials on these sorts of topics for a number of years, dating back to at least, I think, 1981. Back in that year, he was the first Joseph P. Kennedy Fellow in Public Policy on Capitol Hill. He followed that up with a tenure as legal counsel to the U.S. Senate Subcommittee on the Handicapped, and then also as counsel to the Small Business Committee of the U.S. Senate. So he has a great deal of experience on Capitol Hill dealing with these issues at a national level. He spent a number of years, well over a decade, I think it was, as the executive director of the United Cerebral Palsy Association. In addition, he's been at the NDI since 2001. So I'm pleased to welcome Michael Morris today. Thank you for being with us, and I'll hand it off to you. And I believe Michael Kanak with the Thompson Center is going to assist with providing the PowerPoint slides. Thank you.
Great. Thank you so much. I'll ask you to advance them. First, let me thank all of you for joining this program today. Initially, when first contacted, I look forward to seeing you in person in Wisconsin. Obviously, the chain of events that has occurred brings us together virtually. However, whether I appear in person or I now speak with you via this mechanism of online communication, I hope the message I share with you, the thoughts, the insights, will resonate with you, challenge your thinking, and most importantly, challenge you as an individual, as a family, whether you're also a staff member or leader in a nonprofit or work in a government agency. I believe what I share with you should resonate, should challenge you, and should lead to new steps with a sense of urgency, given the challenges that all of us now face with the coronavirus crisis. Next slide, please. As was mentioned, I started National Disability Institute some 15 years ago. Not that the world needed another nonprofit in the disability community, but because of what I wanted for us to focus on. I found a gap in information, in strategy, and so I started NDI to really focus on imagining a different world where people with disabilities make more informed financial decisions, that we bring forward innovation in terms of the diverse players in every community, whether it's financial institutions, government, nonprofits, supporting individuals and families. And third, that what we do can have and be measured in terms of impact. Next slide, please. In 2000, no disability organization or government agency at any level wanted to talk about or address the challenges of poverty confronting millions of Americans with disabilities every day. As I reached out to over 25 national disability groups, they said to me, we focus on healthcare, we focus on employment, we focus on housing. And I said, yes, you do. But underlying the challenges in all of those types of supports is that people with disabilities live in poverty, that families raising a child with a disability have extra costs, which make it more difficult to meet even the most basic needs. So we incorporated in 2005 as a nonprofit. Today, as an organization, we have 35 staff located in 10 states. Based in DC, but staff are scattered across the country. And in a typical year, we are involved with over 12 public and private funders, touching audiences in all 50 states. Next slide. Our mission is to drive social impact, to build a better economic future for people with disabilities and their families through pioneering research, advocacy, policy development, public education, and innovative demonstration projects. And over the course of the next hour, I will share further details in each of these areas. Next slide. Our priorities are to improve the relationship between the disability and financial community to advance financial inclusion and economic stability for people with disabilities, develop and document pathways to improved economic self-sufficiency for youth and adults with disabilities, and align our public policy, which is not yet, unfortunately, aligned, where we are promoting work, not poverty. We are promoting saving, not the expenditure of money to meet asset and means-tested public benefits, and that we focus on helping people with disabilities and their families build assets, be more self-sufficient. Our work is focused on improving collaboration across federal agencies, not just the ones you're probably familiar with, departments of intellectual and developmental disabilities, vocational rehabilitation, special education. We spend a great deal of our time working with the banking regulators, Office of Comptroller of the Currency, the FDIC, the Federal Reserve, because people with disabilities need to be a part of the economic mainstream and need to be supported in their pathways to greater economic self-sufficiency. Next slide, please. So let's get to the heart of this. Financial empowerment. We know the word empowerment in the community of people with intellectual and developmental disabilities, but what is financial empowerment? Financial empowerment is about accessing affordable financial services. It's about people with disabilities, even with significant disabilities, have the opportunity for financial education so that they can lead more self-determined lives, making informed financial decisions. It's about economic pathways to financial stability and security, and it's about overcoming barriers to financial stability with reduced historical dependence on means-tested public benefits. You shouldn't have to remain poor to become self-sufficient, and you shouldn't have to pervert your natural tendencies to be more independent, to be more part of community, but being held back because public benefits and supporting you, whether it's healthcare, whether it's rehabilitation services, whether it's housing assistance, whether it's personal assistance services, that you don't get them unless you stay in poverty. Next slide, please. So for people with disabilities, financial inclusion and financial empowerment, this is not a fringe issue. This is fundamental to the definition of community participation and inclusion, fundamental to solving other intractable social issues people with disabilities and their families face every day, now in the coronavirus challenges and crisis even more than ever. Poverty, hunger, homelessness, poor physical and mental health. Next slide, please. So what is the cost of exclusion? We know these statistics, I'm sure many of you do know them, that among people with disabilities, age 18 to 65, the majority of people are not working as compared to less than 20% of people without disabilities. 26% of people with disabilities across the full diversity of disability live in poverty. But for people with intellectual and developmental disabilities, over 90% of working age adults are underemployed or unemployed and are more likely to be living in poverty. Next slide, please. So in a changing economy, it is often the people at the bottom, those not expected to keep up, that are left the furthest behind. Well, that slide was, of course, written before this coronavirus challenge. It's hard to tell who's on top since so many people are challenged today by loss of jobs, loss of income. and access to healthcare. In any case, for people with disabilities, we have always been in the back of the line. And I want to share with you strategies to move on up and be a part of the economic mainstream. Next slide, please. We as a nation can do better than where we have been, but it's not easy. There's no simple chart I can share with you. There's no simple strategy. It requires change in thinking for each of us, and that's whether you're an individual with a disability or family member, the organizations that support people with disabilities, government at all levels, to not only change thinking, but change our behavior and change policies to support people with disabilities becoming more self-sufficient and leading more self-determined lives. Next slide, please. So what is disability? I think many of you are certainly familiar with, historically, we sat in a medical model that disability is a condition within a person. And the only way to address that condition is to fix the person. We then moved, and still are moving, to the social model, that disability is an interaction between the person and the environment, that people are limited by barriers society places in front of them, not solely because of their disability. These barriers are not just physical, they're also programmatic and attitudinal. Our job is to change this environment to be a supportive environment that lets people meet their full potential, whether it's in the classroom, the workplace, or in any definition of inclusive communities. And that includes changes to the financial environment as well. Next slide, please. So before I move to strategies and moving ahead, I think it's important to recognize the diversity of disability. And disability is not diverse simply by types of disabilities, but disability is also diverse in terms of gender and race and ethnicity and age. We know that the prevalence of disability increases with age, but we also have seen in the data that's been collected for some time that disability also increases with people who are of color, African American and Latino. And next slide, please. So we know that race and disability are not completely separate sources of disadvantages that parallel each other. We know that race and disability are overlapping identities that are both related to systemic inequality. National Disability Institute, working with a variety of other researchers, both in the federal government and in a number of major universities, has documented the disparity by disability and color in poverty rate, educational attainment, employment status, and the use of financial services, as well as the existence of financial stress. And this particular chart shows, again, that just take people who are African American, 22% working age are also people with disabilities, but it goes up to 39% when we look at poverty rate in that same population. And similar great variance that whatever your identity is, when you add disability, you can also add poverty as the typical situation. Next slide, please. So we also have studied, and probably not as well known to many people, but of course, if you're a person with a disability or family raising a child with a disability or a family member with a disability, here's some of our latest data that we did with the FDIC and some other groups. Almost 1/2 of working age adults with disabilities skip medical treatments because of cost. 1/3 are late on mortgage payments if they're fortunate enough to own a home. And over 1/3 were overdrawing checking accounts at least once a quarter. Pretty significant examples of financial stress. Next slide, please. So I want to go from that quick picture of, yes, so many of us are aware now more than ever of the impact and influence of financial stress. it's not just an impact on financial health. Research has shown that there is a direct correlation with an intersection on wellness, and that's both physical health and mental health. So there is this interlocking set of relationships that more needs to be done to understand, but more can be done and is beginning to be done to help ameliorate those interrelationships. One of those opportunities is with the ABLE Act, Achieving a Better Life Experience. This is a law that was passed in 2015, and it provides a number of opportunities, which I'm now going to go over, which is an interesting situation in the state of Wisconsin. 42 states have opened ABLE account programs. Someone may correct me, to the best of my knowledge, until recently, I believe the state of Wisconsin has not opened their own ABLE program, but we'll talk more about that. Next slide, please. So what is the potential of ABLE? There are now, based on current definition of who is eligible, there are 8 million individuals with disabilities and their families who could be opening ABLE accounts. To date, after 5 years, there are only 56,000 accounts open nationwide. That's less than 1%. And we'll talk a little bit about that. Next, please. So what is ABLE? It's a law that created a new option for eligible people with disabilities to save money in a tax-exempt account that may be used for qualified disability expenses while still keeping their eligibility for federal public benefits. So multiple things here that should get your attention. What, saving money that doesn't affect your means-tested public programs and benefits. Healthcare. Some people also use food assistance. Some people also get housing assistance. Many people get cash benefits through SSI. Many of these public benefits are means tested, which doesn't capture this ABLE account, cannot knock you out of any of those public benefits. Next slide, please. There are eligibility requirements to open an ABLE account that speak to age. So you have to be age 26 or younger with a significant disability. And you have an opportunity here to not just look at your own state, and someone has put in the chat box that Wisconsin has yet to open their program. Do not be terribly concerned, because the majority of states, I believe over 38 states, offer eligible individuals with disabilities and families raising a child with a disability to open an ABLE account through one of their state programs. The designated beneficiary of the account is the account owner. That could be and should be the person with the disability, but the account could also be managed by a parent for a child, a guardian, or a person with power of attorney. May be allowed signature authority over the account. Now here's what's important. There are choices of investment and savings options to select, and among the 40+ ABLE programs, they have partnered with different financial entities. And so the state of Tennessee offers over 10 investment and savings options. Most states tend to offer between 3 and 5 investment and savings options. What does this mean? As money goes into an ABLE account and it grows, you do not pay taxes on the growth. You have the opportunity to take money out short term, every day if you wanted, or you could take money, save it up, as many people are doing, because they want to live in a home of their own someday. They want their own means of transportation. They have other dreams that have never been realized, but could be realized as money continues to accumulate in an ABLE account. Next slide, please. So funds in the account may be used for qualified disability-related expenses. So what does that mean? Well, a qualified disability-related expense is just about anything you can think of. A qualified disability-related expense relates to paying for education, paying for employment-related supports, paying for transportation, paying for healthcare costs not covered by some public or private benefit. It covers the cost of technology, which was a part of the prior panel and discussion. Both mainstream technology to buy a computer, hardware, software. It could be to buy a cell phone. It could be to buy assistive technology as well. I worked with the regulators at Treasury when they were trying to define what this law means in terms of qualified disability related expense. And after 2 hours sitting across a table from each other, one of the staff people from the Department of Treasury looked at me and had a big smile on his face. And he said to me, Michael, I think I finally understand this. Basically, there's almost nothing that doesn't qualify as a qualified disability-related expense because it's all about improving health and wellness, about independence and community participation. The only things right now that are not considered and not eligible would be things like paying for alcohol, gambling debts. I mean, really small, unrelated things to just having a better quality of life experience. Multiple individuals can contribute to an individual's ABLE account, and there is a limit of the amount of money that can go in annually, up to $15,000. There was a recent amendment over a year ago where on top of the 15, if the ABLE account owner with a disability is working, they could put from their earnings up to an additional $12,000 as long as they are not participating in some type of retirement program through their employer. Enrollment is done online. Every state that has opened a program has really simple video and direction, very easy to follow. Most people have said to me they can follow the directions, follow the instructions, and open an ABLE account in less than 30 minutes. It requires no attorney. It requires no financial counselor. You as an individual with a disability or a parent or family member can do this. Next slide, please. We've gone over some of this. What is an ABLE account? Why is there a need? Who is eligible? What the funds can be used for? Where do I go to open an account? So another question is, what happens to the funds in an ABLE account when a beneficiary passes away? Well, right now, if there is money left, the money could only go into an account of another member of the family if they are eligible to have an ABLE account. Otherwise, the money will revert back to the state. Next slide, please. As I said, 43 state programs, including the District of Columbia, 56,000 accounts as of the end of last year. That number is definitely over 60,000 now. Over $350 million. That's money from parents, from friends, from the individual with a disability, in some cases from employers, have gone into these 56,000 accounts. The average account size now is about $6,000 and growing. Next slide, please. There are a number of consortia, so it's really not just 40 plus individual state programs. There's the National ABLE Alliance run by the state of Illinois State Treasurer that has 16 states. There's the Stable Network out of Ohio, both neighboring states to you, which has 12 states. There's the ABLE for All with Oregon, Washington, Maryland, and Florida. And then there's a New York ABLE on its own and a few other states on their own. Next slide, please. I want you to be aware of where do I learn whether this is right for me? Where do I learn more about the individual state programs? We started at National Disability Institute 2 months after the law passed, the ABLE National Resource Center. It offers almost monthly free webinars. It has a free newsletter, and it offers a roadmap to ABLE. Next slide, please. This captures what you can find with more detail on the ablenrc.org website. It takes you through a series of steps in terms of enrollment. How do I enroll? What can my funds be used for? How do I manage my account? Who is eligible? And then it takes you to the other side. Okay, you've opened an account with a particular state. Now we need to get serious about setting financial goals. We need to be serious about building a circle of support. Who's going to help me with making decisions on the use of the money and continue to help my account grow? We need to make smart financial decisions, choosing between needs and wants, choosing between short-term objectives and longer-term objectives like finding a home of your own. We need to continue to regularly monitor one's account, and we need to celebrate the opportunity that has not been there for thousands and thousands of people with disabilities and families with a child with a disability. This is a passport to freedom. This is a new way of visualizing one's future, whether it's a child, a teenager, or an adult. Next slide, please. What are some of the factors in selecting a state? I always advise people choose your home state. In Wisconsin, that's not possible. So you want to read carefully visiting multiple states. On the ABLE National Resource Center website, there is a comparative chart looking at specific features and comparing from one state to the other that can be helpful to you. Some of the features you want to think about are: what is the cost? Is there a monthly fee for maintenance? Is there a cost when I open the account? Is there an annual fee? Are there investment fees? And they vary state by state. You want to look very carefully at investment and savings choices. You want to look at the Medicaid payback piece, whereas that this is part of the federal law that all states have to follow, that if a person dies with an ABLE account and there's money left in the account, that money may go back to the state to cover costs that were used to cover Medicaid services and supports for that individual. A number of states have passed their own laws saying they will not do this. And so that's, again, maybe something to look at. However, if you're not a resident of a state that has done the Medicaid payback prohibition, unfortunately, it will not help you. State income tax deduction. Some states have it in addition to the benefit on the federal tax level. Some states don't. Some states have put in place a debit card with all kinds of bells and whistles so you can track the expenditures. And if it's for someone's son or daughter with a disability with an ABLE account, it allows a parent or a designated other to be monitoring the use of that card. So just some of the things people are looking at. Next slide, please. What are some of the common misperceptions about ABLE? After 5 years, these fears have not gone away. Loss of benefits. The law is as clear as can be. You cannot lose any means-tested public benefit. There has been some bad advice and misinformation, even from federal agency representatives, but that is the law, and you cannot lose benefits. You can't afford to contribute to funds. Sure, that's for many people when they think of, well, I don't have any money if you're an adult with a disability, but who's your circle of support? Family, friends, and potentially, as we're beginning to see, even employers contributing to ABLE accounts. Number 3, lack of interpretation of ABLE account to be disregarded as an asset for means-tested benefits. So this is what I mentioned a few minutes ago. It can't knock you out of coverage for Medicaid. It can't knock you out of coverage for food assistance or housing assistance if those are means-tested. But many people have not heard that and not understood it. The number one reason that there are only less than 60,000 ABLE accounts in the country is because of polling we've done. Most families, most individuals with disabilities who are eligible have simply never heard of it. And then finally, many people have said, well, I have a special needs trust. Why do I need an ABLE account? Here again, many trust advisors, many lawyers were giving out bad advice, unfortunately, to begin with, but it's generally understood now that there are qualified disability expenses related to housing that cannot be done with a special needs trust. So it's not an either or, If you have a special needs trust, you want to open an ABLE account. And many special needs trust advisors or trustees are now putting money aside from the trust into an ABLE account. So the exceptions in trusts around housing costs are now covered by an ABLE account. Next slide, please. We have created a group of ambassadors. These are individuals with ABLE accounts, parents with children with ABLE accounts, working age adults with ABLE accounts from all over the country. If you go to the website, ablenrc.org, you can learn about them, hear their story. They will tell you about their dreams and how they're going to realize those dreams in terms of spending money out of their ABLE account to have more freedom, more independence, more choices in their lives. Next slide, please. Opportunity. Next slide. So I wanted to share with you, and some of you listening on the call may be work for a service provider agency. And you may be in the business of providing employment services and supports to people with intellectual and developmental disabilities. All too often, those jobs have been low wages. They have not been supporting ABLE accounts opening and growing. There is no opportunity for financial counseling. There's limited access to benefits counseling. There's no financial education. And as a result, we're not doing everything we could do. Provider agencies across this country, now we're 5 years into ABLE as an option. What we're seeing is beginning, just beginning, but it's something to challenge you if you're with a nonprofit service provider agency or even a public agency, is why not seed ABLE accounts? Or if a person is opening an ABLE account, why not match a certain amount of that contribution on an annual basis? Why not mix not just offering benefits counseling, but offering financial and benefits counseling for better, more informed financial decision making? Why not offer financial education and skills development as part of the decision making around community choices and inclusion? And why not talk about helping develop an individualized pathway, a customized pathway out of poverty? Next slide, please. Becoming model employers, advancing financial health. We are certainly interested in talking with you, the ABLE National Resource Center and NDI, to help build your capacity to do the things on the prior slide. Seed and match ABLE accounts, provide financial education and counseling to your employees with disabilities, and I should add other employees who don't make a lot of money, the direct care support staff. Job coaches have similar needs in terms of access to financial education and counseling. Promote the diverse faces of ABLE, which then changes other people's perceptions of how important an opportunity this is. And then provide peer support. Bring together, even virtually now by phone, multiple ABLE account owners to protect and advocate for them that they continue to use their ABLE account wisely, make wise, informed decisions, and that they support each other and share success stories. Next slide, please. I want to share with you another strategy, the Community Reinvestment Act, CRA. This is something that next slide, please. If you walk into a bank, you may see a plaque somewhere in the corner on one of the walls. Obviously, we're not doing that today with the coronavirus crisis, but it says that this bank has a plan on file as to how it's meeting Community Reinvestment Act obligations. Well, here's what CRA obligations for some 40 years must do. A bank must provide investment, lending, and service that meets the needs of low and moderate income people in their footprint, where those branches are. Well, for most of those 40 years, few banks really ever thought about that low and moderate income people with disabilities are a part of the population they are supposed to serve. National Disability Institute has brought together a body of research to show, yes, people with disabilities are of low and moderate income and are in financial stress, and that banks have to rethink the way they spend their money. Now, this is not a small amount of money. On an annual basis, last year, banks spent over, you ready for this number, over $450 billion in meeting CRA obligations, Community Reinvestment Act obligations. Imagine if 10% of that was dedicated to meet the needs of people with disabilities and their families, related to employment support, related to technology support, related to creating more affordable and accessible housing, related to financial education and financial counseling. Those are all legitimate ways a bank can use their CRA dollars to support the disability community. About 6 months ago, NDI started a new center, the Center on Disability Inclusive Community Development. The URL is listed here. There are a lot of resources on that site can help you to learn even more. Next slide, please. Well, I thought, given where we are, let's quickly jump into the coronavirus health and financial challenges. Next slide, please. On March 24th and 25th, I led over 18 national disability organizations in a listening session on what is the impact of this pandemic on the disability community. We had a presentation from Senator Bob Casey from Pennsylvania, really the acknowledged leader in the House and Senate, supporting the needs of people with disabilities and those that, an organization that serve people with disabilities. We had on the Rehabilitation Services Administration, oversees the VR program. We also had on the Administration for Community Living, over the DD councils, and other programs, independent living centers, and we had the U.S. Office of Disability Employment Policy. You see here a long list of organizations that participated. Next slide, please. I wanted to share with you what we learned from these 18 organizations that touch people in every state. They were self-advocacy groups, they were service providers. They were groups focused on one population, like people with intellectual and developmental disabilities. There were other groups focused on different populations, like paralyzed veterans, people with spinal cord injuries, and others. Here's what we learned. People with disabilities may be the hardest hit by the health, social, and economic impact of the virus. I know some of you listening probably have already experienced some of the trauma of social isolation, the loss of social service supports, loss of employment, and other things. Number two, access to community-based services is being threatened. We heard actual stories because people are losing access to direct care workers, personal assistance services. There are actually people having to move back into nursing homes or move into large congregate settings because they don't have the support at home and in the community. There is an existing shortage of personal care workers made worse by people obviously wanting to keep social distance. Family caregivers are being overwhelmed by 24-hour-a-day support. The community service delivery system is at a risk of collapsing. Service providers are closing due to the coronavirus crisis and are struggling to remain financially viable. Next slide. There is the loss of job and income that puts people at risk. And there is this serious set of issues playing out in multiple states on the rationing of healthcare, that somehow people with disabilities should be less valued and be in the back of the line for respirators, for testing, for actual medical care and services. Next slide, please. Children with disabilities are at risk of not getting access to these education and related support services that they need, and that people with disabilities, students with disabilities in many families don't have access to the technology to get access to the teacher, to get access to distance learning. And what we heard over and over again from the many organizations is that people with disabilities are not being informed because of a lack of access to sign language interpreters, lack of access to materials in alternative forms, and that federal agencies need to rethink the policies that were business as usual and move into a crisis mode to provide flexibilities in rules and regulations so that funding for needed supports and services can continue to be done, and service provider agencies can be paid even though they're not seeing the person face to face. Next slide, please. We also move to help people understand that there is, with these multiple acts of Congress of the last 2 weeks, help on the way. Unemployment assistance payments, one-time cash payments, even if you did not file a tax return, you're a person on Social Security benefits with disabilities, you could be entitled to a one-time cash benefit if you were not listed as a dependent in someone else's tax return. A deferment of the due date for tax returns on a federal level, which has been also adopted at a state level in most states around the country. Some stopping of payments on student loans over the next 90 days, and that insurance coverage cannot charge for testing and medical care regarding the coronavirus. There are new rules about family and medical leave that many corporations and nonprofits will have to follow. That includes paid leave. There is mortgage payment postponement rules, and there is a temporary moratorium on evictions. Next slide, please. We also saw that disability-related nonprofit organizations, some new monies, $85 million to independent living centers, $30 billion that is going to flow to state departments of education and then down to local school districts with very specific language that students with disabilities must be served at home. Obviously, they're not going to be served in person, but if there's a need for technology, if there is a need for compensatory education that is going to continue during the summer, school districts must consider this. Similarly, under the Workforce Innovation Opportunity Act, the Workforce Development System, as well as vocational rehabilitation, need to be looking at the way they're spending money and find ways to support people with disabilities, not so much in person, but through alternative creative methods. Next slide, please. We urge, and this is a document that, several documents that you can access, more information about who is eligible for the cash benefit. We have another document which is about financial resiliency tips, 5 strategies, assess your financial health, find out more about community resources, be informed about changes in benefits, contact your financial services provider, the bank, the credit union that you usually deal with. The majority are rolling back everything from a credit card bill that's being due right now, to mortgages, to transportation, car loans, and other things. You want to talk with online your banker that you deal with or credit union that you deal with, and you want to make sure, if you haven't done it in the past, you access your financial services online. Every bank and credit union pretty much has moved to mobile banking as an option. In today's crisis, it's a necessity. It's no longer a luxury or a choice. You want to be able to access funds. You want to be able to pay bills online. You want to know about their rules that are deferring payment that may be able to help you make a choice between, do I get food today? Do I keep the roof over my head? Or what do I do? You want to be up to the minute on your financial service provider and what they're offering. And then we also had some tips on staying connected in a virtual world. Family and medical leave. There are new federal rules, as I mentioned, for businesses of less than 500 employees, and you want to learn about them. If you're an employee of a company, small or large. You want to talk to your human resources office who needs to be following the new federal guidelines. Next slide, please. You want to reach out to your local education agency if you have a child with a disability who is entitled by law to free, appropriate public education. You want to find out what are they doing for your child so that they continue to get a free, appropriate education. If you're in the adult world, you want to find out what your governor's office and your state workforce development agency, including your vocational rehabilitation agency, is doing about unobligated funds for the program year 2019. These need to be spent with a priority on people with multiple barriers to employment, which includes people with disabilities. Next slide, please. So I went through an enormous amount of information. Probably, I hope you will take the time to go back through some of these slides, whether it is the ABLE Act. And even without a program in Wisconsin, I think the ABLE Act brings home the message in today's economic climate and crisis, both health and financial crisis. It's something, if you're eligible for, you should be looking at, because it's a way to put money aside for that emergency crisis that we're now in and not be impacted by the asset limits that are in many means-tested public benefit programs. I also shared with you about the Community Reinvestment Act. And again, if you're an organization, probably more so than an individual, you want to talk with your bank and find out, maybe you could be doing a project together with funds under CRA, whether that's for giving you access to technology that can be put in families' homes, or set up something in one of your locations, or it's about creating a financial literacy and education program. Or, believe it or not, CRA could even fund the seeding and matching of ABLE accounts. All of that is possible with discussions with your local bank in your local community. And then finally, of course, the many changes that are occurring every day as Congress and the federal government begins to respond for people with and without disabilities. There are pieces there that can help you. Everything from a new cash benefit to expansion of unemployment coverage, unemployment benefits, and other things. So a lot to think about. We tend to, in our world of disability, and for people with intellectual and developmental disabilities, we're always concerned about community inclusion. We're concerned about health, and we're concerned about really people having a better quality of life. That better quality of life has to take into consideration financial health alongside physical and mental health. And now is a time more than ever before to think about whether you're a program manager or you're an individual with a disability and a family member. People with disabilities need to think about financial goals, short-term and long-term, need to think about how do we advance financial health, because it will make a difference. I leave you with this quote: progress is never permanent, will always be threatened, must be redoubled, restated, and reimagined if it is to survive. We're all in a mode of crisis and about survival. I hope some of the messages and strategies I've shared with you can help us bring new courage, new thinking, new changes in behavior at an individual level, at a family level, at a community level, to make a difference in the quality of life experience for individuals with intellectual and developmental disabilities. So I'll stop there. I have not been paying any attention to the chat room, maybe there's something there. I don't know, Michael and Eric, whether there's time for questions or how are we doing?
Yes, thank you, Michael. We have about 10 minutes where we can take some questions. That was an inspirational keynote. I think it was a great opportunity to hear about all the changes that are going on today. but also sort of the framework of how people can think about their financial affairs and becoming independent with respect to those. Some of the questions that came up, one of them is with respect to ABLE. Currently Wisconsin, we understand, doesn't have ABLE legislation passed. But if someone were to purchase an ABLE account or set one up in another state that has them offered, and then Wisconsin were to establish one, hypothetically, are you aware of whether states that establish these through legislation allow a transition from another state to their home state?
Yes, it's a great question, particularly for residents of Wisconsin who don't have a program. And the answer is absolutely. People are allowed to move money from one state ABLE program to another. So I can tell you California, which is our most populated state, was very late in opening their ABLE program. One of the last of the 40 plus states that have opened a program. Many Californians open ABLE account programs all over the country and are slowly coming back to California. So this could happen in Wisconsin. Now, I didn't mention there is one part of Wisconsin law I believe is still in place, so that when you open a ABLE account in another state, regardless of what state, you will have the opportunity on your state income tax to deduct the amount of money you have put into an ABLE account in another state's program. And I believe that that could be up to $14,000 or maybe the maximum $15,000. Now, it requires an itemizing on your state income tax return, but it is a unique feature that no other state has, where I put my money in another state program, I am going to get the benefit of that in my state tax deduction.
With respect to that, I think it's interesting. The general public, I think, has been fairly familiar with, savings accounts for college, as well as medical flex spending accounts, dependent care spending accounts. Can you explain, is this sort of based on that sort of model? What makes them similar? What makes them different?
Yeah. So the change to the tax code is actually called 529A of the tax code because it's modeled after 529 education savings accounts, which are available in every state and can be available through all kinds of financial institutions and other providers. The state treasurer, which runs the 529 college savings programs, is who is managing in about 95% of these state ABLE programs. So there is similarities, but there are big differences. The college savings program is only for college, education expense, housing, and books. The ABLE program is for, as I mentioned, qualified disability expenses from everything from A to Z to make a better quality of life experience, transportation, housing, employment, education, everything.
And what are in states that have adopted ABLE and then states that haven't, what are the general issues that come up in the discussions that prevent states from passing it? Are there debates that go on that we should be aware of in Wisconsin?
Yeah, I think as more and more states open programs, and the majority have, over 40 out of 50 states, I think that it got tougher on states that have not yet opened a program to say, is it really necessary for us to expend our state money when our state residents could go to any of these other states? And so Wisconsin is the anomaly that said that, or has said that so far, but then did this other piece to say, we won't expend our money, but let's give you a tax benefit on your state income tax return. And so in some ways, I'm not sure that is it best that Wisconsin opened its own program? Maybe not, if it kept that state tax benefit alive and didn't take it away. I know the reason why so many states open their own program was because then what happens is you constantly are getting these benefits questions. And so take a Madison, Wisconsin resident, opens an account with the California CalAble program, and then has to explain to whoever is providing benefits to that individual in the state of Wisconsin, and they go, well, we don't know anything about the CalAble program. We don't know if that affects your benefits or not. That's pretty standard what people hear. And I'm picking on California. It wouldn't matter what state you signed up with. And there is such a lack of understanding, awareness, and education, both by individuals and families, but by all these public systems saying, I don't know what to do. You open that in California, how am I supposed to know whether that affects your benefits or not? The answer is, if they would take a little bit of time, of course it doesn't affect your Wisconsin benefits. It cannot by law, by federal law. But there's a lot of misinformation and a lot of lack of awareness still.
So you mentioned eligibility and how that impacts things. We have a question from a viewer about a personal sort of question that they have in their family. And it's a question of whether it's true that if you're on SSI, that you're not eligible for unemployment. Is that the case? Are you aware of the answer to that question?
Yeah.
Or is
So
it state dependent?
that I believe that is state dependent. I think what we get very regularly and have in the last 2 weeks is there's this new cash benefit, which could be as much as $1,200 to an individual with a disability if they're not counted as a dependent on a parent's income tax return on a federal level, okay? The challenge is many people said, well, if I'm not earning income, am I really eligible for this extra check in addition to my SSI or SSDI check? The answer to that I can give to you unequivocally is yes, as long as you're not on someone else's tax return. Now, it does phase out as you make over, I believe it's over $100,000, but most people with disabilities are not in that situation. Again, we've created such a maze of benefits, Social Security benefits, tax benefits, healthcare benefits. And I remember once meeting, a number of years ago with a college president who obviously smart individual to become a college president, and who had a husband who was a physicist, also a pretty smart person. And they heard about NDI, they heard about me, and they came to us hat in hand to say, we cannot decipher the Social Security rolls, can you help us? And it made me realize that most people are not at that education level. The average family, how in the world are they supposed to navigate through this maze, multiple mazes of benefits? It's a real problem. It's why we created NDI, to try to help not so many people on an individual level, but it's to help organizations to then help thousands and hopefully millions of people on an individual level. And of course, it's not just the maze of federal benefits eligibility. Sometimes there is the option and flexibility for states to do things to make those further more complex. It's a real problem. There are benefits counseling programs in every state funded by the Social Security Administration, but they're insufficient in size to help all the people in need.
On that question about benefits counseling, people in Wisconsin might be familiar with aging and disability resource centers. Are those the types of organizations that are funded by benefits counseling that you talked about, or is that a separate function?
Yeah, aging and disability resource centers, I believe, are, I'm going to guess now, probably less than 5 years old. There are separate benefits, so those aging and disability resource centers should be able to help you. The level of help may depend on who's operating them, the amount of resources that they have. In this coronavirus challenge, everyone is overrun, looking for answers. So people should be patient. But there are separate benefits counseling programs to make it hard. They're not uniformly found, although there is, and maybe I'll make sure, Eric, I don't have it at my fingertips, but we have staff there who could share with you, to share with anyone who's listening or going to look at this later, there is a website that is part of the Social Security Administration website, which can identify for you who is providing benefits counseling in your state. And it will be multiple agencies.
Excellent. We'll collect that and post it on our website along with the PowerPoints for everybody to the extent we can gather those. We have another question about, for the $2,000 spend down rule, looks like ABLE is an option. But the question is, do you need to be 26 or younger in age? What about older adults with disabilities or that end up with a disability?
I'm so glad that question's asked. I did not cover that. So many people have thought, oh, I'm only eligible if I'm 26 or younger, as stated in this question. The reality is you could be 41, you could be 63, you could be of any age, but your eligibility is dependent on proof of age of onset of disability 26 or younger. So that's the differential here. I know for many people I've talked to in the mental in the psychiatric disability community, it's not always so clear what the age of onset was. Now in the IDD community, intellectual and developmental disability, by definition, it's quite clear. And virtually 100% of the IDD community are eligible for ABLE accounts. There is no means testing of ABLE accounts, so as is in some other benefits. So you could be a billionaire's son. I'm not pushing this with an intellectual and developmental disability. You could open an ABLE account and have the tax benefit from it. But most of us are not sons or daughters of billionaires, and there are really clearly over 1 million people in the IDD community who should be and should have opened ABLE accounts. And if for no other reason that how many of us have experienced where our asset limits we're going to have more money than we're allowed, and it's going to affect our SSI eligibility. So we spend it. We go buy a big TV. We go on a vacation. This allows you to have that rainy day crisis fund. If for no other reason, that's a reason to open an ABLE account.
And we just got another comment from someone confirming that ADRCs can be a resource from Jillian. So we appreciate that. You know, you've been in this work, and we'll finish up here in a few minutes. You've been in this work since at least 1981. At what's been accomplished in that time frame in the last 30 to 40 years. You know, can you tell us about the progress we've made over that 40 years and what those items might be, maybe a couple of them, and then areas where you see where we have a lot of potential in the next decade?
Yeah, I do go back. I do go back pretty far. I came to Washington through the efforts of Senator Kennedy and Eunice Kennedy Shriver to create where's the brain trust and public policy development for people with really back then called with people with mental retardation, people with developmental disabilities. And so I was the first one they selected. That program is still operating, and often in more recent years, instead of someone like me, I'm an attorney by background, or someone from a university professor, and some years it was even a medical doctor. More recent years, it's been self-advocates. So that tells you something about the evolution of a program. But I would tell you that enormous strides have been made. Much of it, you know, the crowning the key moment was probably the passage of the ADA some 30 years ago, the Americans with Disabilities Act, which finally gave millions of Americans with disabilities protection against discrimination in the workplace, in virtually every facet of life. And I think, you know, fiscal barriers have been removed. I even think attitudinal barriers in many ways have been removed from going back 30 years ago before ADA. But the real area of greatest change that hasn't happened is really this notion of economic inclusion and financial advancement. Without money, you're compromised in your choices. More people with disabilities until this coronavirus crisis were working. Record numbers of people with disabilities were working in every market sector, not just in low-level jobs, all types of jobs. because attitudes had really shifted. And corporate America was really responding as unemployment got so low. They were looking everywhere to find people, who can we put into jobs that will meet our needs? And people with disabilities were certainly a part of that solution. We're in a whole new time now. As the numbers today show, almost 10 million Americans have already filed for unemployment insurance, and that's just the beginning. So we really are going to face post this coronavirus crisis, because there will be a post. And I think that it's changing the way all Americans think about work. The nature and future of work is going to be done much more virtually, less in person than ever before, whether that's in the world of hotels and food and so many, almost every aspect of life. I think the best news I can share with you, is I remain very optimistic of the future in light of even the times we live in today, is that people with disabilities have really been accepted so much more in the classroom, in the workplace, in the community. And I think that technology, and it's so wonderful you had the prior group on before me, technology is continuing to change what is the new normal. The new normal is all about technology access for people with disabilities, including people with intellectual and developmental disabilities. And that is going to be the game changer in terms of types of jobs people can do, because technology is changing that already, and it's going to change that even more in the future. I do think that financial inclusion, financial health is a key part of what our future is, and has to be a part of when we think about people with disabilities. It's no longer that, well, they're going to make it with government benefits, or they're going to make it on low-level jobs. I think the world continues to rapidly change, and people with disabilities are a value-added part of every community across this country, and hopefully around the world.
Well, Michael, thank you. That was a very inspirational talk that you gave, and Dipti actually provided a little background and said that technology is sort of the next phase that you see is really helping us be inclusive, but also the fact that we're in this together and we have to find solutions that work for everyone. I think the CARES Act, I think, illustrates just that there's this newfound tolerance for the fact that people go through challenges in their lives and that they need options. And so that's great. And that penalizing people sometimes isn't the right approach. Sometimes you need to give people options. And it sounds like ABLE is one of the options you found that can really help moving forward.
Absolutely. I think this is a wonderful program that you put together, because and this is part of it. The disability community is very diverse, even diverse in intellectual and developmental disability. No two people are alike, but the solutions, the strategies, the pathways are similar. And that means a belief today that the presumption is individuals with intellectual and developmental disabilities can work and are working. I mean, this is a blip. We'll come out of this, and people with disabilities will be hired again off these layoffs and what's going on right now. But with that economic opportunity comes new opportunity to be asset owners, to be a part of the fabric of the American economy. And that makes people with disabilities and their families even more valued and valuable.
Well, Michael, thank you so much for giving us your time today. We really sincerely appreciate it. And I think we're at the end of our hour with about a minute left. And I'm glad that we had the opportunity that you were staying on with us for another couple of minutes to share some further thoughts. I wanted to thank some organizations that have been very helpful to us. The first one I want to mention is the Wasteman Center at UW-Madison. Michael mentioned the Kennedy family, and I know that they were instrumental in helping to get the Wasteman Center supported and funded in the early years at UW-Madison. And so there's a history that dates back here in Wisconsin there. Special Olympics Wisconsin is another that's been very helpful to us as we've moved along, identifying topics of interest to people on these webinars. Good Friend Incorporated, the ARC Wisconsin, And then we have some partners that we've worked with at UW-Madison's Department of Rehabilitation and Special Education. They've been very, very helpful to us in getting the word out about these events, providing feedback on the topics. UW-Stevens Point was going to be our host for this event today, and unfortunately, given the COVID crisis that we're in, we were unable to do this in person, but we want to thank them for their support, their School of Communication Sciences and Disorders, but also they have a Disability and Assistive Technology Center that was very helpful to us and helped us connect up with some of the panels that we've worked with on this session. So again, thank you to all the panelists, Ellie, Jessica, Alex, Leanne, and then Shannon, the moderator of our first panel. We also want to thank Catherine, Alice, and Dustin on the second panel, and Dipti. And finally, Michael, thank you so much for being with us, and especially the audience for giving us your time today. Thank you.
Thanks.